Hey guys, what's up going? My name is Robin. Welcome back for another video on the channel today. And inside today's video, I'm going to be showing you guys the Canadian stocks I'm going to be adding inside my dividend-based portfolio. So like usual, if you guys are brand new to the channel, earlier this year in January 2020, I started a dividend-based portfolio, a Canadian-based dividend portfolio, and I've been growing it for the past 12 months. So throughout the year, I've basically been posting these updates showing you guys, how my portfolio has been doing and the different stocks I'm buying. So in today's video, we're going to jump inside the portfolio. I'll give you guys a quick little overview of my stocks I own, and I'll show you guys how each individual stock is doing, and then I'm gonna jump in and show you guys what stocks I'm actually going to be buying. So if you guys enjoyed this video and you guys want to see more content like this, be sure to give the video a big thumbs up. It really helps the channel out a lot. And if you guys want to subscribe to the channel, please feel free to do so. Let's jump inside my Wealth Trade portfolio and let's see how my Canadian stocks are doing for today. Alright guys, so we're inside my Wealth Trade portfolio on the channel, and I'll do a quick little update here on the overview of the portfolio, and then we'll dive in and I'll show you guys a quick little update on each little individual stock that I hold, and then I'll show you guys the stocks I'm going to be buying for today. So the total portfolio ends up being $13,640, and over the past couple weeks or so, past couple months, we've been putting a lot of big deposits into the account. So there's a lot of cash kind of sitting in the account, and a lot of the gains basically have been pushed down because remember, we're putting like large amounts of money, so it hasn't grown yet, right? Like if you move money from one account to another, or if you keep buying a stock on a regular basis, it'll kind of push the return down because you're buying in at that new price. And unfortunately, like when we first started investing, we had the personal account with a bunch of REITs that gained a lot of value, but because we took them out of the account, we lost a lot of that tracking. So putting them into the new TFSA, it kind of resets things. So even though we have a $13,000 portfolio and it says we're only up about 3.87%, it's actually sitting up a lot higher than that. It just looks a lot lower because of the fact that we put in a bunch of big deposits, and most of that has come from the personal account, but it's also been coming from you guys. For anybody who's been using my affiliate link, Wealth Trade is currently offering a $25 bonus for anybody who either opens a new account or uses somebody else's referral ID. So if you guys need a referral ID, check the description of this video. I have mine there, but make sure you use somebody's because you will get $25 for free. So definitely check that out. Alright, so all that's said and done, let's take a quick peek at how the portfolio has been performing. Over the past day, we are down at negative 1%, which is $174. So the stock market opened at quite a bit of a dip this morning, but it looks like it's coming back up. Over the past week, we are currently down negative 2%. So once again, some stocks have went down, and this is mostly because of the fact that once again, I put a lot of big deposits in, and it's kind of resetting the portfolio a bit. So if we get a bit of a dip, it's going to dip down a lot more than normal. Over the past month, we were up 1%, and over the past 3 months, we were up 5%, and all time we were up 4%, but it's actually a little bit more than that, right? If you look at the portfolio. So just kind of keep that in mind. Going down here, we can see each individual stocks. We can also see the money that we have available to trade. I'm probably going to be spending about $500 or so, maybe $1,000 today. We'll see how things go. I have an idea on a couple stocks I want to buy. But here's a quick little view at the portfolio. The first stock we have is Algonquin Power and Utilities. This is a utilities corp in Canada. We are currently down about 6%. So this one actually looks not too bad. They had a really good recovery, but it looks like they're starting to kind of go down a little bit. So this might be one to definitely take a peek at in the future because it is a slow long-term growth power and utilities company. Next up we have is Enbridge. Enbridge is kind of interesting stock, right? They have a high dividend yield, and I think they just recently announced that they're going to increase their dividend yield. I can't remember, I'm 100% sure on that, but I remember reading something about that. But Enbridge is one of those long-term power and utilities companies. I mean, they've done okay. I hold a lot of them in ETFs, so I'm not buying too many individual shares. As you guys can see, I only have 3 shares, and they're kind of doing okay inside the portfolio. But I'm not really buying Enbridge as an individual stock. Next up, we have is Fortis. Fortis has done okay. I have 4 shares. This is a stock I've been looking to buy for quite a while now. I just haven't gotten around to it. It's currently down about negative 3%, and this is one of the stocks we're going to be buying today. Is going to be Fortis. I'm going to buy a couple shares of that. Next up, we have is H&R REIT. This has been interesting. REITs have done quite a bit. We did really good on our REIT, and H&R REIT was one REIT that we had in a REIT-based portfolio, but like I said, we were up like 40%. We sold it, so we obviously lose that tracking, which is unfortunate when you move. If I would have tracked it myself, I could have kind of, but that's too much work for me. I'm not going to do that. I just know in my head that, we're still at a gain from H&R REIT. But since putting it in the new portfolio over the past couple weeks, it's down actually 6%. So this might be something to look into, to invest into a REIT. For today, I'm probably going to invest into either RioCan or H&R REIT as well. I'm just going to take a quick peek at them and see which one. The more I look at this, seeing H&R REIT down more than RioCan is a little bit more promising, so I might look into that. but we'll have to wait and see. Manulife has been really good for the portfolio. I've been buying a lot of Manulife for the past couple weeks, so our gains that we had in the past kind of got pushed down a little bit because we added a bunch of new shares. We were sitting at like a 15% gain earlier, but like I bought a bunch of shares, so that kind of pushed that down a little bit. So just keep that in mind once again. RioCan is we're sitting at -2%. We have a couple shares of RioCan. RioCan did well in our last portfolio as well, doing pretty good. So I'm still going to keep buying RioCan because I do believe in the long term it's going to keep growing. Next up we have is TransAlta Renewables, actually up 26%. They got a big gain over the past little while. See if I can show you guys. Yeah, we can see that they went up quite a bit in the past week. Like I remember one of the days they just shot right up, but it looks like they're going back down, kind of going back to like a normal level. They're still doing really well though, like up 27% inside the portfolio. It's been a really good stock for me. One thing I like to see is Severia Corp. I invested in earlier this year. I only have 8 shares, so it's not that much money. But they're starting to actually climb up here a little bit in the past couple days. So that's nice to see. Nice to see them get a little bit of gains. We can see that in the past 3 months they've kind of recovered a little bit. So that's a good stock to have, and I'm glad they're doing well. Shaw Communications. Once again, I do own Shaw and some ETFs. They've kind of been okay. I mean, some other companies like TELUS that I have here have done much better, and I think TELUS is a better buy right now. They're just a better growing company, and they have been for the past couple of years. Going down, we have one of my largest holdings, which is TD Bank. TD Bank is one of the best banks in Canada. We're up 7%. This is just constantly growing, and I've constantly been buying TD, so I'm happy to see this stock doing so well. To be up 7% for a stock I've been buying regularly throughout the year is really nice to see, because going in the future, it's just going to keep getting better. Next up we have is VDY. VDY is currently up about 4.57%. This was a lot more, but over the past day, like I said, I bought like $1,000 worth of VDY, so that kind of pushed that down a little bit once again, because once again, we don't have a lot of shares here, as you guys can see, because the portfolio is so small. Over time, this will grow. But obviously, we don't have a ton of money inside these stocks right now, so it's going to grow over time. Next up we have is VFV. This is the Vanguard S&P 500. I wanted to add more US stocks inside the portfolio to add more growth, and just to stick them inside a TFSA, because US stocks, I think the growth of the US stocks, even though, they do get taxed on the dividends, and a lot of people, like in every single video, I get at least a couple comments, people asking me like, why are you investing in US stocks inside a TFSA? And I'm going to do a video about this pretty soon just to kind of clarify this, but if you have high growth US stocks with low dividend yields, you pay next to nothing on taxes. Now, if you have high dividend yield stocks that are US, yes, you will pay more, but if they're growth stocks, you'll pay next to nothing, and the stock appreciation will most likely be better than any of the Canadian stocks that we have in the long term. So it's kind of worth it in the end if you ask me. It just takes a little bit longer, and it's a different type of investing than dividend investing, but I do believe I still want to hold a bulk of the portfolio inside US stocks. I haven't decided how much yet, but I do want to hold that. And going down at the bottom here, we have some ETFs that I kind of eventually want to get rid of as they start to grow and recover, so I can kind of make a little bit of more income off them. But overall, in the past couple days, the stock market actually down quite a bit, but that's okay, because that means we can buy them at a pretty good price. So the first stock I'm going to be buying today is going to be Fortis. Now, Fortis I haven't bought for a while. I'm going to buy about $200 or so worth, maybe like $250 worth of Fortis. I haven't bought them for a while. I've been meaning to buy them, and they're doing pretty decently as of lately. They're down about 4% over the year. They recovered quite well, but this is just a long-term defensive-based stock, really good dividend growth-based stock, because they have a pretty conservative dividend yield. They've been growing for a long time. So I'm going to buy about $250 worth of shares of Fortis. We'll just put this in here. There you go, 258. Place that through. Get that done. And then the other stock we're going to buy is probably going to be H&R REIT. I thought about RioCan and H&R REIT, but I just like the fact that H&R REIT is kind of down a lot more. Although RioCan, we could just split it too. I've kind of been splitting the shares. I do have a lot of shares of H&R REIT, so it would be nice to kind of split it up. So maybe I'll split them up today. I'll kind of divide what I would normally buy. And as you guys can see, like REIT's been hit really hard. They're still down 37% year over year. But they've showed signs of recovery as things recover. We're kind of pushing towards, I don't want to say a lockdown, but some places are starting to kind of, go back into that March kind of phase. I know where I am, it's starting to kind of be the same thing. So I'm still going to keep investing, and I do believe in the long-term value of these REITs, especially with the monthly dividends. If these stocks can get pushed down even more and then recover in the future, I'm okay with that, because the recovery as things open up will probably most likely be really nice. So I'm going to put about $150 into H&R REIT, and just to get some of this money spent here, we'll buy $150 of H&R REIT, and then we'll go back to RioCan, and buy $150 of Ryokan to kind of split that up a little bit. I do want to buy another REIT in the future. I'm just not too sure which one yet. I kind of want to diversify it, so I don't want to buy like more or less the same thing that Ryokan or H&R REIT is. I kind of want to diversify it maybe to like Dream Industrial. I know I had Dream Industrials in my old portfolio. Maybe do something like that, but I'm not too sure. I'm just going to have to do a little bit more research to see. But once again, Ryokan down 36%, you know, I still think they're a good buy. Like, I still think they're a good company. I still think they're going to do well in the future. And it really helps to bring up the dividend income by investing in these REITs because they're really high dividend yield and they pay monthly. It helps to bring up some of that dividend yield that I'm looking for inside this portfolio if I'm going to be investing more into US stocks. So that's another reason why I invest into some of these you know, REITs and what like that, especially in the short term, because they will do well in the short over the next couple of years, I believe. And the last stock I'm going to be buying today, so I bought Fortis, I bought H&R REIT, I bought a little bit of Ryokan. The last stock I'm going to buy is, once again, just I'm going to be adding more US stocks inside the portfolio. We currently have about, let's see what the percentage is. We currently have about almost 20% of the portfolio in US, so I want to bring this up just a little bit more. VFV, the S&P 500, has been doing pretty good. As you guys can see, year over year, it's just recovered just a good, solid, slow growth stock, up 10% over the past year. Can't complain, you know, especially if you've been investing throughout the year, you'd probably be sitting at a higher return than that. But you know, as you guys can see, not too much growth over the past little while, but I'm going to keep buying a little bit more into it to kind of get more of those US stocks inside the portfolio. So I'll probably buy like maybe, how much money do we have? I'm just going to refresh the page so it updates the portfolio total, and then I can see actually how much we have. So we have 2,200. I'm just going to buy like maybe like $500 worth of US stocks, and we'll leave it at that. And I think that's going to be the stocks I'm buying for today in today's video. Mostly Canadian with a little bit of US. I still think every Canadian portfolio should have a little bit of US. It's just up to you guys how much, you know, US stocks you want to have versus Canadian stocks. But that's the stocks I'm buying for today, guys. Overall, the portfolio, we'll see how much we have left over. We have $1,700 left to invest throughout the rest of the week. And once again, I just want to say big thanks to everybody who's been using the affiliate links, because we've been getting a lot of referrals over the past couple days, and it's been helping the channel out so much. So thank you very much. Now, before we end this video, I just want to do a quick little recap or go over the dividend income so you guys can see the dividend income of the portfolio. And I want to talk about the goals and give maybe a little bit of inspiration for you guys if you guys are beginner investors. All right, guys, so I like to do this little spreadsheet to keep track of the dividends, and I like to update this in every other video so you guys can see, you know, the value of a portfolio growing over time. Now, you can see the stock appreciation growth over time, but the dividends earned is something that a lot of people, I think it's one of the easiest things to track, and it can give you a cool sense of like, when you're investing in like a lot of ETFs or a lot of like, you know, I don't go too crazy when it comes to stocks. I'm very conservatively. Might be a little bit boring for some people, but some things you can do to kind of spice things up is to, you know, get a spreadsheet, track the dividends, and you can see the growth, and maybe kind of what I like to do is, I'll show you guys in just a second, is like to visualize what that money can buy going into the future. And that's kind of how I'm keeping myself interested and keeping this kind of exciting as time goes on. So as long as the portfolio keeps growing and I keep earning more money, I can look forward to new things to experience in life, and things never get old. That's kind of the approach here. But basically, you guys can see here that, you know, we started the portfolio not making pretty much next to nothing, you know. First month we deposited $400, we made 44 cents. That's it. You know, then second month we made $1.61, and then third month $5. And you can just see, you know, when we took all this money, we reinvested it. We're still reinvesting our dividends. But when we get to when you go down in the spreadsheet, I'll talk about that in a second, but we're reinvesting these dividends, and it's just compounding and growing more and more. So every single month, as we put in our contributions, December's been a little bit higher. I need to update that going into the future. And towards the end of the year, over the next couple of days, I'll probably do like a complete yearly recap. It might be a really long video, but I might do like a complete like recap where I just talk about the portfolio and whatnot. It'll be sort of similar to this video, but just be a lot longer and more in depth. But as you guys can see, you know, these are the contributions we've just been adding inside the portfolio, and this has just been compounding, growing. So, you know, after a whole year, we're making about $40 to $50 a month in dividends, which is pretty sweet. And that money is just going to keep compounding, growing, and make our lives easier going into the future. And our total dividend income so far for the past 12 months is $246, and our monthly dividend, like I said, is sitting about that $40 mark, maybe $50 towards the end of December and January. But as you guys can see, one of the things I've been doing to keep myself interested with this dividend investing, and to also keep the videos more interesting, is to kind of like go through and show you guys what my dividends have been buying me. Now, I'm not spending my dividends, this is just a representation. I'm spending like my own cash I earn on this stuff. I'm just giving like a representation. Okay, I'm making $40 a month. What can that buy me going into the future, kind of thing? And one of the goals is eventually to buy everything I own with my dividends. Now, this might take a really long time, but you guys can see that just a couple, you know, there's a lot of things we take for granted. that a lot of people don't have in the world who don't have money. You know, a lot of people who are from poorer countries and stuff like that. I think we take for granted a lot of stuff that we have, and because we live in some parts of the world where we're given the opportunity to work, have free cash, and then we can stick that cash into investments and then earn stuff that people, you know, will work like all day for, like just basic things like food or basic things like necessities and stuff like that. I think is something we really take for granted, you know. So one of the first things I had was to buy my cup of coffee. You know, I bought a drinking glass and a cup of coffee. That was one of the first things I wanted to pay for with my dividends. Once again, something a lot of people take for granted. And then the third thing was these groceries here. I wanted to spend 20% of my monthly dividend income groceries. If you guys missed the videos where I talked about this, and I try to talk about this and I show you guys throughout the videos, check those videos out because I go into more detail. But the next thing I'm going to be doing is a secret. In the next video, I'm going to reveal the next thing I'm going to buy with my dividend stocks. I'm not going to show you guys in this video. It's going to be revealed in the next video. So you guys have to stay tuned for that. But you know, I've just basically been, you know, spending my dividends and just appreciating more in life as time goes on, and it's been a really cool experience. So I hope you guys enjoy this. I know it's not for everybody, but I've just been doing it here and there to, you know, spice things up and have a lot of fun. So let me know what you guys think about that in the comments. Alright guys, so that's it for this video. Hope you guys enjoyed it. Be sure to like the video and be sure to leave a comment in the comment section to let me know what you guys think of the video. And if you guys want to see more content from me, I'll link to another video. I'll link to my last Canadian stocks I'm buying video so you guys can take a peek about the stocks I bought in the last video. I'll also link to the playlist as well so you guys can kind of follow the playlist along if you guys want to start from the beginning. But other than that guys, that's it for today's videos. I hope you guys enjoyed it. Please let me know what you think in the comments and remember to like the video. Thanks for watching me guys. Hope you guys have a good day and see you later.